Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Casey, and today we are joined by Tony Migliavacca. Migliavacca.
Better.
I'm actually learning Italian right now, so I was actually practicing it this morning. Then it all went to SHIT. Maureen.
Okay, mine is like two guys, Mac and Ernie.
I know, Mclnerney. I'm like, well, I just blew Tony's and I had it down pat this morning. So I'm like, I'm just not even going to go.
Got thrown.
Mclnerney's. How do we have a problem with Mclnerney?
Mclnerney, you know what? Irish boy, pipe down. Okay, so just want to start with, we are still part of the Chrisman Media Group. So check out all the other offerings on Chrisman. And we are also doing NMLS live classes around California. So if you think that the biometric ordeal that you have to go through when you are doing it online and you want a live class, so we have one on November 15th in the East Bay, that's Northern California and Pleasant Hill. And then we're planning one in San Francisco proper, but we don't have a date yet.
What's the date for the one in East Bay?
November 15th. And it's in a lovely spot. I haven't seen the actual room, but the place is great. So we were going to have it in a hotel.
That's in Pleasant Hill, correct?
Oh my God. Yes.
Yeah. Well, you know, there's a difference.
I think everyone else got it the first time I said it, but if you had been paying attention.
There's some people that don't pay as close attention
Not
to
the day we're going to have, is it? Okay. So with all that being said, let us know. And if you, like, I'm doing a private class tomorrow. If you have other classes that you'd like to see us do in other parts of the state or country, frankly, we have people, I mean, we can go to other places. Let us know. We're happy to help. So with all that being said, it's a big economic week this week. You think condos suck? You should have seen this week in news. So it's jobs week. We know that jobs are kind of an issue, and it's actually the primary focus of the Fed right now, second to inflation, which is also this week, just for fun. So today we had JOLTS, job opening and labor turnover. Tomorrow we have ADP, pending home sales, and GDP, because, you know, it isn't enough just to have one or two. Thursday we have PCE, personal consumption expenditure, the Fed's favorite measure of inflation. And then Friday we have our favorite BLS jobs report. And last month it was a barn burner. It was so positive. Like, we haven't seen anything like it. Let's go with ever that I can remember. And so it's going to be very, very interesting to see what it looks like this week.
right before the election.
Okay. And then we have the election next week. So what do bonds hate more than anything? Uncertainty. That's right. And what do we have right now? Nothing but
a lot of
uncertainty. That's all we got.
The world is coming to an end. We just don't know which way it's going.
Well, both sides think that no matter what happens, you know, like, it's a disaster if the other side wins. So I'm not looking forward to any of it, no matter what happens, because, you know, I'm concerned about the fact that we're so disjointed. With all that being said, then we have the Fed meeting again, November 7th, and we'll have another decision on whether they're going to lower, raise, stay the course, who knows. In other news, the 10-year this morning was at 4.32, if you can believe it. But then last time I looked, it was down to 4.29. So we've had a slight improvement today, but don't get used to it. And boy, can I just tell you how happy I am? I locked my purchase on Monday. Oh my God. I had a conversation with the borrower and they're like, what if the rates go down? And I'm like, what if the rates go up? What if they go up? And man, I would be a basket case right now if I hadn't locked. So with that being said, you know, you have more to lose than to gain. So make sure you keep your eyes on the ball, kids. Yeah. All right. So let's talk a little bit about condos. There's other things we can talk about in the economy, and we'll get to that throughout this thing. But I just wanted to set the tone today as we talk to Maureen and Tony, whose names are both basically unpronounceable. And this is how it started this morning, if it gives you any sense of how the world of condos are. So I text them both. Good morning, kids. I'm looking forward to seeing you soon. Did you both receive your panelist invites out of Zoom? Tony, I think so. No response, by the way, from Maureen at all. And I said, that's helpful with an eye roll and a laughy face. And then he said, that was Fannie Mae answer. And I'm like, oh my God, please kill me. So in the event you're wondering how it's going in the wonderful world of condos and you don't have any in your pipeline right now,
Oh,
let's put our little fingers on the pulse and see where we are. How's it going out there?
Tony, I'm gonna let you kick it off since I'm on the naughty step for not responding to Audrey's text.
Yeah, you don't want to be on Audrey's naughty list. It's not
Nope.
a good place to be. I'm
No.
on it often.
I
So
think I was doing it, but then she messed up my last name, so I think I'm back off.
listen,
Um,
listen, I tried, and again, I'm learning Italian. It is Italian, right?
It
It is
yes,
Italian,
very.
but
It'd be pretty
The-
funny if all of a sudden he's like, nope, it's Armenian.
The
Yeah, but
key to
Mclnerney, I think that's Italian too, isn't it?
It is actually, yes. Yeah, that's right. Hit it right on the head, Kevin.
The leprechauns are all talking about their good Italian friends, Mclnerney.
Yeah, drinking Chianti instead of
Oh my goodness. Okay. I'm gonna get serious now. Tony, tell us how it's going out there.
Well, it's going well. We have seen an uptick in volume. We've been busy. Condo reviews are 10 times harder than they were even a year ago. So being busy means being really busy. And I think that one of the things we want to talk about today and probably focus on is struggles with insurance. That's a big item right now, a big red flag that we see over and over and over again. So we want to dive into that. And while now I have the floor, I will tell you that when you say an Italian last name, you have to use your hands. That's the key to saying it correctly. And so it is Migliavacca. That's how you say it.
Migliavacca.
There you
with
go.
your
There-
hand.
Migliavacca.
There it is.
Yeah. Well, my grandparents who are from Calabria would appreciate any tips you could give me to be more authentic. So, all right, go ahead.
Yeah, so I think that we've seen 3 or 4 major items or categories that we'll try to explain today. And I think the number one probably issue, well, the first 2 are tied, but deductible issues. So Fannie and Freddie are very clear about a 5% maximum deductible. We're seeing a lot of creative ways for condo associations to buy insurance, and that usually results in having to make some calculations based on what the information on the cert. A lot of times asking more questions, and we can get into some of those details. I think the big ones, and Maureen, you catch me if I'm wrong, but straight up just looking at what the deductible says, that's number one. We were seeing several that were 7.5%, 10%. That seems to have gone away, or at least
Yeah.
not the norm.
Mhm.
But what we're seeing a whole lot of now is per unit deductibles. And these can be tricky because they can be written in a way that, if you only get an insurance certificate, a lot of things are abbreviated. It may not be clear what's going on. And so we're having to come back and condition and say, okay, what is, well, I mean, PU, water damage, that's pretty obvious. But we're going to call it out. We're going to say, it looks like there's a per unit deductible for water damage. You need to confirm that. Obviously, if we have the numbers there, we'll do the calculation, what that deductible is times the number of units divided by the total coverage, things like that. And that can get not necessarily tricky, but maybe it's got guaranteed replacement costs and there's no total insured value, and we're going to have to get that information. So we're having to dig in a little deeper to make sure that these deductibles work. Now, there are times where there's like geographically specific per unit deductibles, and that could be okay. That's pretty rare.
Especially in California, you're really not going to see those.
Wait,
Yeah.
please hold. Geographically specific. What does
Specific,
that
yeah,
mean?
that's one we haven't heard of here in
Yeah,
California.
Yeah, so it would be something like ice damming. So if you have a per unit deductible for something like ice damming, which clearly only occurs in certain geographical areas, there's an exception for that 5% cap. But again, I don't see it being really relevant. I mean, Tony, I can't think of any other right now that have stuck other than ice damming.
Yeah.
So
I
any,
I think the reason I wanted to bring it up though is often we'll get pushback. Hey, what about
on
the
water.
exemption, on water? And we're like, well, water's not geographically specific. So
Yeah, because people think like ocean water, and what we're talking about is burst pipe kind of water
Right.
or those kinds of issues. So yeah, so like Tony's saying, they'll say, oh, it's a $50,000 per unit water deductible, and we're completely landlocked. That doesn't matter.
Right.
Pipes can burst everywhere. Any property anywhere at any time can have water damage. We're not talking about flood or storm surge. Those are different things.
No, we've been
So
about water damage. I uh, was moderating an insurance panel a couple months ago and interviewed the state insurance commissioner for California, and water damage is huge. I mean, huge, huge, huge. Burst pipes, and they're talking about putting things like, shut off valves that maybe they cost $800 or $1,000, but they can save you and your insurance overall, and how important it is to be thinking about these things. And again, when people are thinking about catastrophic losses, they often in California think fire, and they forget about water, which is huge, huge, huge everywhere for different reasons, as we know. And so many of the issues that happened in North Carolina and in the hurricanes, they were not flooding, they were things, different things that happened. It was crazy. So
right.
yeah. So okay, so
Right.
water, big.
But to your point, Audrey, that's also why, like as Tony was saying, the HOAs the premiums are so expensive that they're having to have like different structures to their insurance in order to make these ungodly premiums even, somewhat financially feasible. So the way that they're getting their premium down is by agreeing to per unit water deductibles. Well, if you have a $50,000 per unit water deductible, I'd say 9.9 times out of 10, that insurance is not going to be acceptable, because when you multiply that amount times the number of units in the project, you're going to be at 15, 20, 25%. And so by keeping, I mean, God bless the HOAs, because they're trying to keep the premium down. But when they do
Right.
that, the project is now ineligible for any conventional financing. Now, this is not true for FHA. FHA doesn't have the 5% cap. But because the premiums are getting so expensive,
Right.
they're, having to take these per unit deductibles. And then by doing so, their projects are now ineligible. So, if you can get your hands on the certificate of insurance early on and see whether or not there's a per unit deductible, just know that might be very problematic.
So let me just stop for a moment and remind people that you offer the option of having all these condo docs reviewed ahead of time. So a realtor talks to a seller, and they can go to your website, condoreview.com, and they can click on the button and order a preliminary condo review where you'll look at the insurance and you'll look at all these things. And if they would get ahead of this, which we have been yelling from the rooftops louder and louder in the last year, by the way, they would save everyone so many issues. And so, and even if they wanted to have just the insurance reviewed separately, they could do that, right? That's
absolutely. Yep. That's an a la carte service that we offer. If you can just get that certificate of insurance, you can submit it to us at like ours at condoreviews.com, and we can just look at that and tell you, kind of right out of the gate if it looks like it's okay. And as Tony was alluding to, this is taking longer. So whereas we used to be able to look at a certificate of insurance and be like, okay, yeah, that looks pretty good.
right.
Tony, I don't know about you, but for me, I almost never get a certificate of insurance that has all of the information I need right out of the gate. It is so rare. So,
yeah, definitely.
leaving time for the back and forth. And the other thing is we will ask a question and we get an answer, but it may not actually answer the question we've asked. So it is not uncommon now to have to go back 2, 3, 4 times to an insurance agent to make sure that we have everything documented. And there are a lot of moving parts between inflation guard, subrogation, waiver of subrogation. I know somebody here wants to talk about ACV, which is another huge issue. So the further out you can get ahead of it, the more you will minimize the stress.
Well, okay, so I'll give a great example on our end. So
Mm.
we received the condo docs that were ordered, but of course no HOA cert, which we ended up not needing for our purposes. But the master they gave a name of the insurance company, a phone number, and that was it, right? So we call the insurance company and they say we can't look it up unless we have the policy number for the insurance. Okay, you can't like look it up under the fine. All right, great. So then I go back to the realtor and I say, who would you suggest we contact? They give me the name at the HOA management company. I call and email that person who then emails and says, well, if you want the answer to that, you can either get it from the homeowner or you can, contact these people and or the homeowner can come to me and this other person. So then I'm like, are you kidding me? You can't give me a freaking account number so that we can, that's real. Okay. So then I'm like, okay, here we go. So I go to that person that she suggested we contact. And then I go back to the realtor and I say, okay, this is what's going on. Just hang on, because maybe this will work. But if not, just want you to be on standby. We may need the homeowner involved. Anyway, it's this ridiculous 2-day nonsense with being jerked around by these people who, for something simple, potentially. Now,
Yeah.
I'm wondering, now that we say that, when the underwriter reviews the insurance, are we going to be okay? It's a PUD, but like, is it going to be acceptable for that too? I don't know. And I'm just blown away by the management companies and their ability to just toss the ball or ignore the ball and to what end? They're not serving their clients, right? So
Right.
it's frustrating, so frustrating. Okay.
It is. So again, that's, the cautionary tale of you cannot give yourself too much runway,
Yeah.
because some of them are great to deal with and some of them are an absolute nightmare.
Mhm.
And you have to deal with whoever you get. You don't have any choices, and usually there's no way to get around them. So yeah.
There
The
is
sooner you know, the
also
better.
there is also the option. It's quite common in California too, where you would go look on EOI Direct, and now they're charging like $150 for the insurance certificate.
Yep. That's what we run into.
That is,
Used to be like $20, now it's 150.
We complained about the 20.
hang on, let me
Right.
put on my list of things.
Well, it's a cash cow.
Yeah.
I'm
Well,
I'm gonna complain to the CFPB. I mean, they're so worried about LO comp and everything else. I'm like, all these little fees that are killing the borrowers
Oh.
drives me nuts.
little digression here, but I heard a story about a HOA that came in and new HOA, they brought in a new HOA and they assessed everybody this huge special assessment. And then after they collected the special assessment from everybody, they just walked away from the project and kept the money.
It was a management company, right?
Yeah.
It
And
wasn't,
that is why you have fidelity insurance. So when your funds are embezzled, you have
Yeah.
insurance for that money.
that is horrific. Anyway.
Yeah.
Okay, so moving right along. So again, get ahead of this. Don't wait till the last minute. And we have got to get our realtors on board with this whole idea of they need to get ahead of it, because that'll save everyone, including their sellers and them.
Yeah.
So
Sometimes-
something that Maureen had started to mention, I want to make sure we got at least to the second point, because these are definitely the two biggest ones. The endorsements on the policy. This has become something that is crucial now. We have evidence of, we see it almost on a daily basis, projects in CPM going from Fannie approved to unavailable for things like no inflation guard. Now, some of these endorsements that we're about to talk about have been in the guidelines for a long time, but we know for a fact they are being paid more attention, a whole lot more attention. So there are, I don't know, there's a number of them like the actual cash value we'll talk about specifically, but like the special form. And if not, then what perils are on the policy? We have to know these things. They're specified in each of the guidelines. What perils have to be included? Building an ordinance. What's one I just said? Inflation guard.
Wait,
um,
please hold
Waiver of subrogation.
We gotta stop.
severability.
Let's just
Yeah,
stop
I
there.
know.
Gotta take these
At
one.
least they're not acronyms.
Yeah, inflation guard. Let's start there. Let's like, I'm like, okay, I don't even know what you're talking about. So let's just go back to the beginning. Inflation guard, what is that?
Yeah, so both Fannie and Freddie have in their guidelines to, if inflation guard is available in the market, it's their wording, not ours. And this is one of these that we never get a straight answer, or it'll be a two-part question, like answer one, not the other. We have to go back 3 times to get them to answer. And a lot of times they'll say, no, we don't have inflation guard, and this carrier doesn't offer it. But the guideline doesn't say if the carrier doesn't offer it, it's okay. It says if it's not available in the market. And so again, we have to go back and qualify.
I don't even know
Inflation
if
guard-
Well,
it is.
yeah, Tony, Audrey, inflation guard is just a mechanism whereby the amount of coverage is automatically increased 2, 3, 4% year over year.
Oh,
So
using
it's an
inflation that-
automatic increase, assuming that you've stayed with the same insurer from one coverage year to the next. Automatically, it's going to increase. Now, the really difficult thing is that even when there is guaranteed replacement cost,
Mhm.
which is the absolute total gold star for insurance coverage, which means at the date of the loss, whatever it costs, you are going to be insured for that amount. Fannie Mae has said that even if you have guaranteed replacement cost, the policy must still have an insurance, an inflation guard endorsement.
Wow,
Oh.
that doesn't mean it makes
That
sense.
doesn't make any sense.
Doesn't make any sense.
It doesn't make any sense. And I would be perfectly happy for someone at Fannie Mae to watch this and hear me say this, because there's no way to reconcile the caliber of coverage that GRC is and wanting, and making a project ineligible when it has GRC because it doesn't have inflation guard. And one of the tricky things is we've been told different things by different agents that if you have GRC, you can't really have inflation guard because it doesn't make any sense because you have GRC.
Okay, GRC being
What's GRC again?
Guaranteed replacement cost, meaning whatever it is, you're gonna have coverage. And then there's extended replacement cost, ERC, which is usually 150%, meaning it's
Right.
the amount plus an additional 50%. So that's just where we are. So if you don't have inflation guard endorsement, you have to get the insurance agent to say that it is unavailable in the market. Not that the carrier doesn't offer it, but that it is unavailable in the market. Now, if you can get that, then it's okay for Fannie Mae.
Wow.
However, what we've been told by Freddie is that if it's not applicable, it's not required. So I would argue all day long, and I will die on this hill, that if you have GRC, you do not need inflation guard.
Right.
So we have taken the stance that if you have GRC or ERC, inflation guard is not applicable because you already have far better than that. Why would you want a 3% automatic
You could have 150%.
when you have ERC, right?
So do you win
So
this fight?
that's been a really tough battle.
Do you win this fight?
No, I lost it.
Wow.
Uh-huh.
Audrey, you have some friends over there. You can make this happen.
Okay. Okay, so this is for both Fannie and Freddie?
No, no. Remember, Fannie is the one that says you have to have it. Freddie has taken what we feel like is a more practical approach in saying if inflation guard is not applicable in a particular situation, then it's not required.
Okay, so the takeaway here is if you are falling on your face with Fannie, have them look at Freddie and see if it will qualify under Freddie.
Yeah.
Okay.
Yeah.
Okay, that's a good one. Okay.
That's excellent little thing.
That's an important takeaway. Or you can get the insurance agent to say We review the coverage amount every year and increase it accordingly to ensure that the coverage year over year remains at 100% replacement cost. Freddie has also told us that that is acceptable, which seems perfectly logical to us.
Right. And we've
So-
been seeing that people have annual reviews on all their insurance every year at this point, not just HOA, but on everything, because there's all sorts of changes that people aren't aware of, like, cybersecurity coverage that used to be included is no longer part of a regular policy. Those kinds of things that you just think, oh, they're still there. No, they're not. Oh, wait, I just
Yeah.
got hacked and I'm screwed. Great. All right. So moving right along, what other cheerful little nuggets do you have for us?
I know.
I think we should address actual cash value because
Yes.
Alan brought that up. And so ACV is what you often see. It's actual cash value. It is ineligible for both Fannie and Freddie. Fannie, it's ineligible, period. If there's ACV on the property coverage, it's no go. We have seen some things, actually a lot in California, with one particular carrier that they have written, their policies are written in such a way that they say they'll have ACV listed as an endorsement. And often it looks like it's actually an endorsement. Sometimes we'll come back and say actual cash value is ineligible, and they'll say, oh, that's just a list of options. And
So it's super confusing.
It's very confusing. It's very hard to make that case. If we can get them to confirm that it does not have actual cash value on it, that could be okay. But the way these policies are written is crazy. And it's just right there. Sometimes on the 2-page cert, it's right there as a form and endorsement, actual cash value. And you're playing with fire a little bit there, because if the agency see that, they're going to say that's ACV.
Yeah, and just remember, it can't be on anything, any component within the project. Having ACV on any component in the project makes it ineligible.
And actual cash value means what exactly?
It's the depreciated amount. So if, like, I bought a TV at Costco and it was $1,500, well, to get a new one, I would need at least $1,500. But the actual value, like, it's more like the resale value. It's the depreciated amount. So a year from now, maybe I could get $900 for this TV, right?
Yeah, but the
So
good
that's all
thing
I'm going
is
to get.
TVs aren't a good example, because you could buy that $1,500 TV next year for $900.
Okay. But
That's probably true, but that is probably, or maybe a Christmas,
Yeah.
whatever. Okay, the car, what have you.
right.
It is not how much you need to go out and replace it. It's how
Right.
much you could sell it on Facebook Marketplace.
Right, but most car insurance is actual cash value.
Oh, Facebook.
correct?
Well, it depends. It can be. You pay a higher premium if you want replacement cost. You're going to pay a lot higher premium.
Mm-hmm.
Got it. Okay, gosh. Okay, that's important. What else you got?
Yeah.
Ugh, I'm getting a little sick to my stomach.
I mean, I think we're hitting the big ones. That definitely the special form endorsement is a big one. If it doesn't say it's special form, then we're going to ask for a list of perils covered, and then we have to match that to the list in
Okay,
Fannie
start
or
with what
Freddie's.
is special form. Just make it simple for us. What does it mean? What does special form mean?
Yeah, that's Maureen's expertise. She loves it. She loves
Okay, great. Thanks, Tony. Okay, so both the GSEs require that the insurance be written on special form. There's special, there's broad, and there's basic. And sometimes you will see all perils. And what those buckets mean are indicate which perils are covered. If you have insurance that is written on special form, that means all the perils are covered, everything, a plane crashing into your house, hail, wind, hurricane, all the things, named storm, all the things. If you have broad form, that usually means the same, but it may have certain exclusions. Basic form almost always excludes water. And that's why that one's a huge red flag. Of course, it's less expensive. But when we see a certificate of insurance and we see that it's basic form, that's a huge red flag, because rarely will it be acceptable unless the HOA has actually gone out and gotten another standalone policy that covers that peril, like water or whatever it is. Now, Fannie has a more exhaustive list in its selling guide of all of the named perils that must be covered.
Okay,
So if you don't have the special form, it still may be okay, provided that somehow you have cobbled together insurance that checks all of those boxes, right? It can be 5 different policies. It doesn't matter.
okay.
Just have to have sufficient coverage for every single one of those perils.
Are there
Um,
places out there with 5 policies?
What's that?
Are there places out there with 5 different policies?
Oh, well, if you have a high rise or something like that and you have $400 million in coverage, yeah, you're gonna have 20 insurers. Because
Okay.
it's layered, and so they're splitting up the risk. Nobody's gonna sign up
There's-
for all of that
there's-
risk.
There's an HOA
And
in
a
North-
lot of times too, what we're seeing with more and more natural storms is a property policy and then a separate wind policy, because a lot of the damage originates from wind.
Storm.
So, but that's the whole special broad basic. But the bottom line is you just have to make sure that all of the perils that are required to be covered are covered.
Wow, okay,
That's
so,
what it is.
yeah, interesting. Okay, so do we miss anything on the endorsements side of things?
Waiver of subrogation, Tony?
Waivers, sever, I mean, yeah, we could probably do this all day.
Yeah, I mean, we really could. That's another one that is starting to get more traction, and also building an ordinance. And that is coverage that is in place with respect to whether or not, say, a building is damaged, has to be rebuilt, and it's going to be more expensive because now the building codes have changed. So in order to be compliant with the building codes, the local ordinances, it's a little bit of extra coverage. If say, there's a lot of projects out there that have been grandfathered in. They're not compliant with current code, but they've been grandfathered. But if they were to be destroyed, they would obviously have to be built back to code.
Right.
So
What are you laughing about?
We have some funny comments.
guys comment about
About how condo values have gone down by 50%.
by 50% since we started talking.
Well, and that's in addition to the 50% they'd already gone down.
Yeah.
Already.
Yeah.
Oh my. Well, it's so funny. So my new purchase that I've been working on, I thought it was a condo when it first came in. That was the whole thing. And I can't even explain how relieved I was to find out it was a PUD. I mean, for everyone involved. So it was, yeah.
Yeah, we're not, I mean, Tony and I are straight shooters. We're not going to pretend. I mean, I would say the difficulty of navigating condos now has more than quadrupled.
Yeah.
It's not impossible, but man, there are a lot of hurdles to clear.
But it is mind-boggling that, again, I know I keep harping on this. I cannot say it enough. This could be something that LOs go out, make it your drumbeat that you have with realtors where they are not on board. I talked to someone the other day. They're like, "Oh, did you see my new condo listing?" I'm like, "Oh yeah, did you get the HOA docs?" I mean, do you know, she had no idea like about anything, hadn't done a single bit of due diligence on any of it. And they're listing them for sale. And so our biggest gripe used to be they would say it was a condo or a townhouse when it was actually a condo. That is the least of it anymore. I'm like, it is absolutely a disservice to everyone involved in the transaction to not get this information up front, to not spend the $300 to get you guys what you need and make sure that you've got something that's even remotely viable as far as being a qualified package, right?
I had one a month or so back where client called me and said, "Oh, I found this lovely place downtown Berkeley, and it's only $600,000. Of course, that sets off all the bells and whistles. How come it's so cheap? And yet it's so lovely." Turned out that they had condoized a single family when they added an ADU, And they, so they had the two, but they never formalized the condo association. And so as the, for they created it, but they never had any meetings, never set, they never funded it, never did anything else like this. And I'm just like, that is a legal nightmare you're looking at there. You know, if you got a lot of family attorneys, maybe you want to get involved in this one, but I would tell you to walk away from this beautiful little property.
Yeah.
I had somebody say that they'd inherited a fourplex and that they were thinking of turning it into condos. And I
Huh?
literally choked, and I'm like, I'm not an attorney. I don't give legal advice, but that's a terrible idea in my humble opinion. And
It depends where it's at.
what?
It depends what city.
It literally doesn't matter what city it's in, because once you are subject to the condo guidelines, you
Mhm.
have set yourself up for all sorts of crazy. And so,
Yeah,
and again, when we're teaching in NMLS this year, there's a whole section on ADUs, right? And it's the, it's the solution for everything. And aside from the idea that maybe you should go park someone in an RV on your front yard for 6 months and rent to them and see how you like being a landlord before you decide to do that, 15 feet from your front door. Aside from that, the suggestion is when they're talking about building these ADUs and junior ADUs and these units on your private, on your single family lot, they are suggesting that you have a homeowners association. And I'm like, the verbiage that is
Suggestion is
used
not a,
in when they were creating the laws, you can tell that they don't have a single idea about which end is up with all this stuff. And so I'm just waiting for all of that to hit the fan, because it is a disaster waiting to happen. Meanwhile, we're badgering the DRE going, why isn't anyone monitoring homeowners associations? Why isn't anyone regulating them? They're not regulated in California. I don't know about the rest of the country, but there's no overseer of the HOA management companies. And I just,
yeah, not really. No.
it makes me crazy, obviously.
But I will say too, just a little tip. Remember that townhome and townhouse is just an architectural term. It has no
Right.
legal meaning whatsoever. It is either a condominium or it's a planned unit development. There's
Right.
no such thing as a townhome as a legal construct.
You're right.
It is
Thank you for
strictly
that.
an architectural term. But generally, people, when they say townhome or townhouse, it is a PUD where
We're
you
thinking-
own the land underneath the unit, and then life is much easier as opposed to a condominium where you do not have fee simple ownership in the dirt
Really good
under your
point.
unit.
Thank you, thank you, thank you. And also important for those of us who live in places where typically a condo touches another, unit. There are condos that are actual single family looking.
Oh, absolutely. You can have a fully detached condo. Yes.
Yes, which that's not something we see around here at all, or I
But
haven't.
those are actually pretty straightforward because they
Yeah.
kind of fall into a different bucket. So
Ah.
those are as straightforward as condos get.
Is it? In what
Yep.
way? Again, I'm not familiar.
Because if you have a single family detached unit, you have an HO3 policy like you do on a house. You're not dealing with a master property policy. So you don't have to worry the same way you do about, the deductible, like all of these like landmines that you step on with master policies
Uh-huh.
tend to not raise their ugly head on an HO3.
Okay, because they have insurance unto themselves.
Yeah,
So
I mean, it's just like if you insure it just like you would a single family home that wasn't a condominium.
oh wow, interesting. Okay, see.
So they are very straightforward.
Okay,
And
great.
you don't have to look at the budget either.
Wow. See, kids, there
Wow.
is some good news in all this. So if you can find
A condo that doesn't touch anybody else.
anybody else, you might be in business. So there was something
You're good.
when you're driving around town. Oh
Yeah.
my goodness. Okay. Yeah. And always, again, just a cautionary, always look at the prelim. The prelim tells you what that property is. Don't listen to the realtor. Don't look at MLS. Don't listen to
Yes.
the seller.
Yes.
Absolutely 100% look at the title.
What if you don't understand what the prelim says?
Well, then you should call us. We'll help you.
Get another, oh, I was gonna say get another job. Was that wrong? Okay. So, all right. Okay, well, moving right along. What else do we got? What else? There was some concern because we met with you guys in April,
Yeah.
And we had an extremely informative, robust conversation. And, here we are in almost November, but still October. What'll we talk about? But there's such a huge topic right now. And so what's new? Oh, I don't know if there's anything new. Literally, we haven't touched on anything we discussed in April at all. So this is all new. Good Lord.
Yeah,
Okay. Yeah.
it is, I feel like, and the thing is, we used to approve almost every project we looked at, and now that I would say it's probably 50%. I would definitely say, don't you think, Tony, since we last talked to Audrey and Kevin? Yeah,
50.
it's really frustrating.
Oh,
And
Wow.
and most of it is insurance based.
Yeah.
I mean, we still have the deferred maintenance world, critical repairs. I think things aren't quite as shaky as they were initially. But we are definitely still having to send things to Fannie Mae to say, look, it's just not clear if this is okay or not. I mean, there are lots of cases now where we know, and what's been really tricky for you guys in California is SB 326. So we've got lots and lots of projects that are either they're midstream, they've had their SB 326 inspection on their balconies,
Mm-hmm.
and they're in the process
Started
of getting those
of doing
repairs
the
made.
work, but they
okay.
don't have the work done yet.
Again,
Right.
let me just stop you right there. We need to explain because not everyone will know what that is. SB
Okay.
26. Explain what that is and the timeline in January 1st and all that. Just walk them
Okay.
through.
Well, hopefully I know all this off the top of my head, but so it's a Senate bill that requires all condominium projects,
Now that's California Senate,
sorry,
not US.
California.
California, over 3 stories, or even just have any balconies.
I
I feel like
do-
it's all, I feel like
I
I
think
believe
it's
they had to have all balconies inspected.
any balconies, yeah. Because a lot of the deferred maintenance rules for Florida are 3 stories or above, but in California, basically, if you have balconies in your project,
Mhm.
there's a state law that says it has to be inspected and certain parameters or requirements have to be met. And January 1st of 2025, right, Audrey?
Yep.
Is
Yep.
coming up.
Coming up.
You need to have the balconies in these condo projects compliant. And a lot of them have been slow moving. They haven't wanted, they didn't have the funds, or it's taken a while to get the funding, the loans, to pass special assessments, to get qualified folks out there to do the work.
Yep.
And when it comes to Freddie, we are very, very, very uncomfortable with approving any project that has basically any outstanding repairs.
Right.
Fannie Mae has been a little more reasonable in that if like the work is, they've contracted it, the work is started, it's being done, and there are no imminent life safety issues. So we have the SB 326 engineer report. Somebody's gone out and said, yeah, you know what, you're not compliant. You need to redo the waterproofing membranes or, some such. But no life safety issues. Then that's probably, we could probably get comfortable with that for Fannie Mae.
Yeah, but try and get that. There's no life safety issues and
nobody
they don't
wants
want
to
to be
put that
liable for the
writing.
fact that something happens.
Yeah, no, I mean, if there's any hint of that in the report, we're declining that project. But
Yeah.
if it's more like a superficial kinds of things, and they specifically state there are no imminent safety issues. And again, the work is like, it's in process, right? Like, we have documentation that we can put in the file that shows that they're not asleep at the wheel. Those are ones that we might get comfortable with. But if it's a situation where they've been sitting on the report for a year and the repairs haven't started, or there's any hint of any kind of life safety issues, compromised railings, those kinds of things, we're saying no to those because, it's just too problematic. And if those files are to be audited, the likelihood of a repurchase demand is sky high.
So let's talk about that for a minute. The GSEs are very famous these days for auditing post funding. And tell us how that's working post funding. Are you hearing anything about that? I mean, are they are there buybacks around HOAs not being vetted properly? Is that, are they checking to see was the work
Wow.
completed? Like what are,
Yes,
tell us about
yes,
what you're seeing.
yes, absolutely. Fortunately, from our perspective, we haven't seen that many, but we had not Inter-Island's been in business over 40 years, and we had not seen a single repurchase demand in the first 38 years, I would say. And then after the collapse of Surfside, which was obviously so catastrophic, the number of condo loans being audited and then the number of repurchase demands just blew up. It just skyrocketed. Now, fortunately, in our cases, I was able to successfully defend those, but it took a lot of work, to go through piece by piece and get the GSEs comfortable with them. But there was one where everything was perfect in the project and all they were doing was replacing the roof. It hadn't failed or anything. And Freddie forced a buyback of that loan, forced the repurchase for no other reason than they had like another 20% of the roofs to finish. It was beyond absurd. It was the most ridiculous thing. Now, that has really calmed down. We're not seeing that kind of overzealous repurchase demand activity, but we've also gotten a lot more conservative. Like I said, we pretty much won't approve a project if there's outstanding repairs for Freddie. I not that they aren't structural or anything. Like any kind of repairs, because that's what we saw for so long. And fighting those fights is so expensive and time consuming. It's just, and you still don't know where they're going to land. You think there's no possible way that this could be a problem. But after you see something like that happen firsthand, you're very gun shy.
So when you see the pendulum swing like this, at what point do you start getting comfortable with this again? Okay, so they were doing the repurchase for a while. You say it maybe is easing off a little bit. So at what point do you feel like there's some comfort level for you? And again, we're trying to protect our borrowers, right? So if you've got someone buying into this complex, you're trying to protect them and let them know this is not warrantable with the GSEs, right? And so it's such a tough conversation on all of our ends because we're trying to convey, okay, they're not just trying to kill a deal. They're trying to protect you and keep you from having a loan that is going to need to be repurchased. And that, you know what I mean? Like those conversations, how do we deal with all that?
Yeah, and that's true because there's two sides to that coin, right? Because you're trying to not have the loan be repurchased, but for your borrowers, it's complicated because it gets sort of emotional and they can be led a little bit more with their heart sometimes as opposed to their head. So when they fall in love with a unit and a project that has deferred maintenance or critical repairs, unless it's negotiated ahead of time, they're signing up for a lot of financial responsibility. They will have been there 5 minutes and the next thing you know, they're getting an email that says, hey, everybody needs to chip in $10,000 to take care of this problem. For the most part, that is not what anybody signs up for, nor is it, most people just don't have that kind of money laying around to just then, kind of pay up.
Usually the negotiator with the
special
seller
assessment.
will give them a credit towards that assessment.
Right. If they know it's coming,
Yes.
right? So it's a known factor. However, if sometimes we see them move very slowly. So there may have been an inspection, but no special assessment has been passed. But the inspection exists.
Right.
Fannie and Freddie both require that any kind of structural, mechanical, or electrical inspections that have occurred in the prior 36 months must be handed over to the lender for review. So we need to get those reports. And if we see them, it may not be a life safety issue, but it's definitely something that's going to need to be addressed. And so if there's no special assessment passed, it's harder to negotiate that for your, you know, your borrower, that they're going to get that kind of compensation, you know, in the deal. So it's, you know, I mean,
Yeah,
it's just a hard, it's a hard discussion.
I had a condo like this where they had the inspection and then they saw it in the minutes that the property had been inspected, and then they asked for the report, and there was no report, you know, quote unquote. But I finally solved the problem by saying, well, did the contractor give you an estimate?
Mm.
And they're like, yeah, there's your report. Give me that
Yes,
estimate.
exactly.
And
Right.
that finally solved the problem. But I had all the real estate agents screaming at me like, you're holding up the deal, blah, blah, blah. And I'm like, I'm not holding up anything. I want to close. I don't know why real estate agents think that we hold up deals because like we like
You want to get paid as much as they do.
Yeah, I know.
Well, the whole thing around, first of all, okay, aside from, can you afford an assessment that comes out of nowhere? But what if you need to sell the property and all of a sudden you've got this property that is basically non-warrantable, God knows what
Exactly.
happened to the value, et cetera, and you are totally stuck. And
Yeah,
so
because
that's
now your unit is only you know, saleable to cash buyers.
exactly.
You do not want to do that to yourself.
Well,
You know,
and that's
because
what
you don't know. I mean, you may
yeah.
have to sell it in a year. You don't know what's going to happen, right?
Yes.
So buying into a project that, you know, in which issues have been identified, has, it's a lot of layers of risk.
This PUD that I'm doing right now, the last meeting minutes for the board were as of April. And I said, where's, you know, if they're okay, they're meeting quarterly, right? All right, we've got July, we've got September, where are they? And so we literally got apparently they exist, they hadn't been posted. And so we just got an extension on the contingency for the HOA because we're waiting for those minutes to be provided, which we've been told they will be. But it's insisting that you do see the minutes for the last 12 months, ideally meeting minutes for the board, because then you see what those conversations are and you can help, you know, your buyers have some insight. The other thing too, oh my God, I almost died.
Absolutely.
So I've seen it where a realtor will text the borrower and say, all right, so you have all the HOA docs, review them and let me know if you have any questions. I mean, that poor buyer's brain explodes. That's
Of
insane.
course it does.
So someone's got to walk them through that. So just a little heads up on that happening. It's like, good Lord, people. So anyway, it is those meeting minutes, make sure those are a priority, make sure that
Yes.
we are, and again, there's got to be this understanding that we're all just trying to take care of our buyers and sellers. And everyone wants to close a deal, but we're not, you know, we're looking.
Yeah, but people need to be making fully informed decisions. I'm glad you brought up the minutes, because I think Tony would agree that the other thing we have problems with is actually getting the HOA or the management company to answer the questions
Yes.
that are required to be answered.
They have attorneys telling them don't answer these
Oh,
questions.
absolutely. And we get that boilerplate all the time. So one of the things that we do is we ask for the minutes.
Yeah.
And I mean, I don't think we could count how many times we've uncovered something that wasn't disclosed anywhere else that we found in the minutes.
Yeah.
Wow.
Yeah. It's amazing. It's just, it's mind boggling how much hair is on all of this, which again, nobody's really overseen.
Hey, there was a story in the Wall Street Journal about a month or so ago about a condo in Florida where some developer started buying up all the units in the building and was offering, you know, above value for each of the units. But once he had 95% of all the condos in the building, he then had the building, he now controlled the HOA. And according to Florida law, you don't, all you need is 95% of the units to vote, or the owners to vote for something. And he voted to condemn the entire building. And so the 5% of people that did not sell out to him because they loved their view and they loved their lovely little condo suddenly are owning a condemned building. Didn't hear the story, huh?
No.
Okay, what's the end of that? Jesus.
I think the end of that story would be you got a loan on a property that's in the air that doesn't exist anymore.
I'd be curious to see what the attorneys do with all that.
Well,
that's
and that is exactly why there are very hard and fast rules from Fannie and Freddie that
Mhm.
that cannot be. You cannot have, Tony's at 20 and 25%.
The single entity, yeah,
Yeah.
20 and 25, yeah.
Yeah. So
Freddie is
under,
25.
yeah.
I'd
And
like to-
that's to keep that from happening so that it is never possible for a single entity or person to ever have that kind of control.
Interesting.
wow.
I was wondering how that happened because like, yeah, how did
Well,
that?
I tell you, those loans were not conventional.
Got it.
He had to pay
Yeah.
cash.
Unless you got, 4 different investors pooling together and,
Well, I don't know. I mean, we hear
one owning more than 25%, and
Okay,
then
you guys, we have literally run out of time, and I want to get to FHA VA before we are done. So, you got 3 minutes. Go.
So the best thing about FHA is it doesn't have the 5% deductible cap. So, but remember, if your buyers are going to go FHA, you're going to have a higher requirement for fidelity, and your legal docs cannot have any kind of prohibitions on who to lease to, or that the borrower, I mean, a unit owner has to own for 2 years before they can rent. FHA doesn't like HOAs to put restrictions on unit owners as far as their ability to lease their units.
Okay.
But if everything else is now, and I know the pricing's not the same, I'm not an idiot, but we do like to let people know that that's one workaround for the deductible cap.
Okay. And VA, anything?
I think that's the same. I think it's true. The same is true for VA.
Okay. But all the special forms and the ACB and all that is it apply?
Tony, what do you think?
No, well, FHA, the guidelines don't specify any of that. I think it's just wind, and it might have special form now. I can't remember. I don't think it does. It's much more lenient. However, I would assume they're going to change that in the near future.
At some point. But as of right now, you don't have the inflation guard or waiver of subrogation
Right.
or building
Right.
an ordinance or the 5% cap at the moment. So
have-
that's a big plus for FHA.
We have the FHA assistant commissioner coming on our show in November, so
Oh.
maybe we'll put that on the list of things to cover. See
Yeah.
where they're going with
I
all
hope-
that.
Maybe
that
don't
they-
tell her. Maybe
No,
don't.
yeah. We don't want them to focus on that. Like, there's enough, with the fidelity and stuff with FHA, that can be tricky enough. We don't want them to jump on this bandwagon.
Well, I think okay, so I guess there's a fine line between, of course, we don't want to bring their attention to it, but what if they're already focusing on it and it's around the corner? Do we just wait till
Yeah.
it whacks us in the head? I don't know. All right, you
Yeah.
guys can vote. You tell me whether I should bring it up or not. You got a few weeks, so let me know.
We'll do a poll.
What?
We'll do a poll.
Exactly. We'll do a poll. All right, kids. It is a busy week out there. There's a lot going on. It'll be interesting too to see the beige book came out with the Fed, and it does not look like the sunshine and roses that we're seeing in a lot of the reports that are coming out with the data that is considered when the Fed is deciding what they're doing next. So it'll be
why doesn't that surprise me?
you know what? I hate it that I'm starting to get suspicious, but it's a little weird, isn't it? Like very, very weird. But in other news, home price appreciation has definitely cooled a little bit, but is still on the ups, is still in the positive, which is great. Apartment rents are going down. That'll help us. New rents, that'll help us with our inflation numbers. Existing home sales, just know that you're looking at these numbers for inventory, and yes, they are up, but they are still 25% less than pre-pandemic. 20% of places sold over the asking price, over the list price. 26% of the market is first-time home buyers versus 27% last year. Still a lot of first-time home buyers in the market. Cash buyers 30%, investors 16%. Those numbers are pretty close to where they've been. So there's business out there, and we just need to go get it and figure out how to make it work, and make sure that you're using the tools that Maureen and Tony offer through condoreview.com, and get your realtors on board with vetting those condos and the HOAs prior to putting them on the market. Please, please, please. And then if you have an opportunity, if you're on a condo board, maybe help them understand some of these rules so that they realize how important it is for their owners that we are meeting these guidelines. So how about
sure.
that? So condoreviews.com, looks like there's an S on the end of that.
There is an
And-
S.
What?
Yes, there is an S.
Because it's never just one condo review, it's multiple. And with that, we just want to say thank you for being here today. Is there anything we missed? Anything we should last minute?
I don't think
No?
so. Thank you so much for having us.
Great. All right.
Thank
We
you,
love
Audrey.
it.
Thanks,
Love
Kevin.
it here. Thank you
See
so
you
much.
guys.
Have a great week,
Thanks.
everyone. And don't forget, NMLS November 1st is Friday. You have not done your NMLS continuing ed. It is time, probably past
And
time.
make sure you get all your states in.
Yep.
That's one big mistake people make is they'll miss a state if they're multiple
That's
license
the
states.
pot calling the kettle black. Okay, with that, we'll talk to you later. Bye, guys.